Well, that was a great start to the virtual gold conference, hearing from Rick Rule Unplugged. Well, from Rick Rule Unplugged, you're now going to hear all about how, not only just why invest in gold, how to invest in gold. And I'm really delighted that Sawan Tanna, he's the treasurer of the Perth Mint. Now, they're our major sponsor for today. And I'd like to, Sawan, thank you so much to you and all your team for supporting the virtual gold conference, because without that, it's very hard for me to put these on. So thank you to the Perth Mint. That's first up. But secondly, this, ladies and gentlemen, if you're not sure about why should I invest in gold, what should I do, how do I do it? Well, the Perth Mint and the treasurer of the Perth Mint, who's a very busy guy, I'm so excited you're with us today, Sawan, to tell us about investing in gold. So over to you. And if I don't understand something, on behalf of our investing audience, I'm going to ask you a couple of questions as we go along.
Sure. Thank you, Kerry. And look, really glad to have an opportunity to connect to everyone despite what's happening across the nation.
Yeah.
And good morning, everyone. So I'll start off. I've been at the Perth Mint for just about 5 years, and really excited to talk about the Perth Mint, but specifically about Perth Mint Gold, which is listed on the ASX. So before we start off, just a few legal formalities to go through. I won't go through each disclaimer in detail. I'll just skip the slide on for a couple of seconds.
And basically, ladies and gentlemen, it means do your own financial research, do your own research, and don't invest a dime of your own money into this crazy market unless you've taken advice in the first place. Would that be about it, Sawan?
Correct. And also, I'm not a financial advisor. I can just give my own opinions.
Exactly.
Okay, so today I'll aim to answer the following questions in terms of who is the Perth Mint, how can customers invest in gold, what is PMGold, the difference between PMGold and physical gold, and 3 reasons why, in my view, customers should look at investing in gold now.
Perfect.
So to start off with, who are the Perth Mint? The Perth Mint have been in the precious metals industry for more than 120 years. It is a fully integrated precious metals enterprise with a refinery. The refinery processes almost 300 tons of gold every year. That accounts for more than 10% of the global gold production. And it processes more than 80% of the newly mined gold in Australia. The second function that Perth Mint has is a treasury function, and Treasury supplies gold to all the major global bullion banks around the world and generates a turnover of more than $23 billion. Perth Mint also has a depository business. It stores or holds in custody metal or precious metals worth almost $6 billion on behalf of 65,000 customers across 100 countries. Customers include central banks, high net worth individuals, and institutional investors such as super funds. And finally, Perth Mint also has a minting division that mints world-class, the gold coins and bars, which are sold and distributed to more than 130 countries globally. So with Perth Mint, it's not just an integrated precious metals business. What makes Perth Mint stand out from the rest of the precious metals industry participants is that Perth Mint is fully owned by the government of Western Australia. And that places Perth Mint in a very unique position to offer a world-only government-guaranteed depository program. By that, I mean that any ounce of precious metals or cash that an investor holds or stores with the Perth Mint via depository is fully guaranteed by the government of Western Australia under the Gold Corporation Act of 1987. And finally, the Perth Mint is also accredited by all the major 5 global exchanges. That includes the SGE, the London Bullion Market, as well as COMEX. Because Perth Mint are owned by the government of Western Australia, we have to publish our annual financial statements. So that's just a summary of the last 5 years financial statements of the Perth Mint. Our financial statements for 2021 should be out in the next 2 months.
Those numbers have gone up quite substantially from 2016 to 2020, Sawan, on the income side. Look at that.
Correct, Kerry, and that's driven based on two things. Number one, the underlying value of precious metals has increased almost 75% if you look at the price of gold. Back in September 2018, price of gold was $1,200 an ounce. It is now around $1,750 US dollars an ounce. So that's one reason why our income has gone up. And the second reason being just the volume of transactions which we have seen through the Perth Mint over the last 5 years has increased tremendously. We've seen a high number of investors purchasing precious metals on a more frequent basis.
Okay.
So how do investors buy gold? And specifically, how can investors buy gold from the Perth Mint? There are effectively three ways investors can buy gold. The first is the traditional method, where investors can come over to Perth, to our shop here, and purchase gold and gold bars and coins. Or they can also log into our Perth Mint website and purchase gold or any precious metal and have it delivered to anywhere in Australia. That's the first method. Second method is through our depository business.
Now, sorry, Sawan, I'm going to just interrupt you for a moment there because this is COVID times. So, you know, they can't physically get over to the Perth Mint. And by the way, ladies and gentlemen, I've been there. And when the borders reopen, you have to go and see the gold pour at the Perth Mint. That's phenomenal. So it's well worth going and seeing. But if we can't. The borders are closed to all of us on the East Coast at the moment. But if they can't physically get to you, they can go online, purchase the gold or the silver, and the Perth Mint can then hold it in a safety deposit box. Is that correct, on their behalf?
That's the second option. So the first option is where investors can buy gold, silver, or platinum, or any coin and bar from our website and have it delivered to the collection point or to the doorstep or where they wish metals to be delivered. And Kerry, the storage functionality or the deposit functionality you're talking about, that's the second option there, the depository option, where investors can open an account with the Perth Mint and buy precious metals and have it stored at the Perth Mint. And investors have a number of ways they can open an account. We have a smartphone app called GoldPass. Perth Mint also has an online web-based application called Depository Online, and also a traditional brokerage service, effectively like a VIP service, where customers can call in and buy precious metals and have it stored at the Perth Mint. And the storage costs vary from 0% to 1%.
So, Sawan, is it better again, there's a lot of people here that are going, well, am I better off to take possession of the physical bars and coins, or am I best to leave it in the storage with the Perth Mint? I mean, or is it horses for courses? I mean,
yeah, it's different customers like different things. Some customers buying a bar of gold and holding it and physically keeping it at home. However, the storage, they have to think about storing the gold. I personally wouldn't want to keep, a kilo bar gold bar at home. That's almost $60,000-$70,000 at home. And also some investors may want to insure the physical bar as well. Whereas the flip side of that is if customers hold a depository account with the Perth Mint, they don't have to worry about storing it, insuring it. There's an inherent government guarantee attached to our depository solution. So it's horses for courses. Different people like different things, and that's what we do here in the Perth Mint, Kerry. Yeah. We allow customers flexibility to either physically purchase precious metals or have it stored here at the Perth Mint.
Okay.
And the last option I have there on the slide is customers can also buy precious metals or gold specifically via the ASX. Perth Mint has a product called the Perth Mint Gold. The ticker code is PMGold, which I'm going to talk about more in detail later on. So that's the third option where investors can buy and sell gold via the ASX. So next up is I want to go through what is PMGold. Ticker code is PMGold. And anyone can purchase PMGold. Customers who have an account or a share broking account who are able to buy and sell shares on the ASX can buy and sell units in PMGold. The underlying objective of PMGold is to allow investors to gain direct exposure in the price of gold in Australian dollars. So every unit of PMGold that an investor purchases gives that investor a right to physical gold held at the Perth Mint. So 1 unit of PMGold is equal to 100 of an ounce of physical gold stored and held by the Perth Mint. So if an investor is holding 100 units in PMGold, they are effectively holding 1 ounce of gold that's stored at the Perth Mint. Now, the graph on the right-hand side clearly shows the underlying objective of PMGold, that is to track the price of gold in Australian dollars. You can see from that chart that the price in PMGold directly monitors and correlates to the price of the spot price of gold in Australian dollars. Now, one thing I wanted to flag is PMGold was launched in 2003. It was actually the first or one of the first gold listed products anywhere in the world.
Oh.
Yep, it was launched back in 2003. And since then, the fund size of PMGold has grown to more than $500 million. So there are a number of gold listed products on the ASX.
Yep.
In my view, I'll explain 3 reasons why or what makes PMGold stand out. The first reason being is it's cost effective because investors only have to pay a management fee of 15 basis points. And that is the cheapest management fee for a gold listed product on the ASX. Number 2, there is a convertibility function that's inherent to PMGold, meaning anyone that's holding a unit in PMGold can convert PMGold into physical gold anytime that they wish. It's a fairly straightforward process. All they have to do is contact the Perth Mint, fill in a form, and then transfer the PMGold units to the Perth Mint and can exchange those units for physical gold bars, which can be delivered to the customer or can be stored at the Perth Mint in their own account. And the third reason why PMGold, in my view, is better than other gold listed products is the inherent government guarantee, where the underlying physical metal is stored by the Perth Mint. It's fully government guaranteed by the state of Western Australia. Did you have any questions?
If I was to, okay. Somebody sitting out there, and there's a lot of people listening at the moment, and let's just take $1,000. I'm going to open up a brokerage account somewhere because this is an ASX listed product, so it's not that difficult. And the ticker code is PMGold. If it's the entitlement is 1/100th of a troy ounce, does that mean I would have to invest depending on what the price of gold is? In other words, each unit is worth something correlated to the gold price. Or can I put in any amount of money? Or am I buying a unit as per the cost of gold? Does that make sense?
Yep, sure, Kerry, that's a good question. So think about PMGold as you purchasing a share, say shares in Coles, for example, and the share price of Coles, in theory, say each share is valued at $35. Investors can buy any amount of shares that they wish to purchase. It's the same scenario in this case, where investors can buy any amount of units or shares in PMGold. So right now, The spot price of gold in Australian dollars is around 2,450. So because each unit of PMGold is 100th of an ounce, the PMGold would be traded at $24.5 a unit. So investors can purchase, obviously they can only purchase 1 unit as a minimum, so that's $24.50, but there is no maximum amount that they can purchase because PMGold is highly liquid, and there is no restriction in terms of how much, because we have plenty of gold here, Kerry, and Perth Mint goes through 300 tons of gold on an annual basis. So in terms of physical gold that we have available to back the underlying PMGold, there's plenty of gold that we can offer to our investors.
All right, so let's just say that there's a rush and there's a whole bunch of people that buy PMGold all of a sudden. Now, I'm sure this is not going to happen, I'm just playing devil's advocate. Do you then take that physical gold out of the Perth Mint depository, or whatever you want to call it, safes, vaults, and put it aside for allocation to PMGold? How does it work?
So PMGold is unallocated gold. It's effectively gold that is used as part of our working inventory. So that means that investors have a right to physical gold that is held by the Perth Mint. That gold could be in any form. It could be in the form of gold that's sitting at our shelf here. In fact, we have a 1-ton gold coin on display here at the Perth Mint shop. I'm not sure if you've seen that, Kerry.
I've seen it, Sawan. I tried to lift it up, but I just couldn't get there.
Yeah, so that 1-ton gold coin that we have on display actually forms part of our unallocated gold holding. So that's part of our working inventory of metal. So to answer your question, some metal would be physically segregated, like the 1-ton gold coin. Some metal would be part of our working process at the refinery or at the mint, but not every metal would be sitting on a shelf in the vault. It's forming part of our working inventory, and that includes the 1-ton gold coin.
Okay, all right, thank you.
So next up is I wanted to go through why, in my view, Perth Mint Gold is what makes Perth Mint Gold different to customers buying physical gold.
Right.
So the first is convenience. Anytime someone wants to purchase physical gold bars or coins, they must always look for a reputable seller of that physical gold. They need to ensure that they're buying the gold at the market price. And probably the hardest part of holding physical gold is when the investor wants to sell that gold, right? Exactly. The investor must always look for a reputable buyer of that gold, and also make sure that the person buying that gold back is paying the market price of gold. With PMGold, investors don't have to worry about that because they can buy and sell PMGold anytime during ASX trading hours. The only thing investors need is a share broking account to trade on the ASX. Second reason is investors do not have to worry about physically storing gold under the bed or in the house, or they don't have to worry about insuring that gold. With PMGold, the underlying physical metal, as I mentioned, is held by the Perth Mint, and that metal is fully guaranteed by the state of Western Australia. So there's a management fee that we charge, 15 basis points, and that's the lowest management fee of any gold listed product on the ASX. And the last point is there's no fabrication fee to pay. So when a customer is purchasing a unit in PMGold, that unit that they're purchasing is effectively, it's very close to this underlying spot price of gold. So if the spot price of 1 ounce of gold in Australian dollars is trading at 2,450 right now, the unit of PMGold would be more or less around 2,450. So customers know that they're not paying any fabrication fee. So to summarize, PMGold.
Sorry, before you summarize, the fabrication fee, that's just the fee turn the gold into a bar or a coin. And I guess the more complex it is, for example, I know at the Perth Mint you have some fairly fabulous, because I've got a couple of coins, and that takes a lot more work, doesn't it? So just, if you wouldn't mind just explaining where those costs of fabrication come in and how that can sometimes cause a little bit of an increase in the price against what we call spot gold, which is the gold price that you see on the television every night.
Yeah, sure, Kerry. That's a good question. So fabrication fee or premium is charged on physical gold bars and coins purely because every time that physical product has some form of value added to it. Value added meaning has some work done on that bar, on that coin. The cost to convert that gold into that bar and coin goes higher, meaning you have labor costs, you have electrical costs, the number of costs which go in to convert that piece of gold into a physical bar or a coin. So that's the reason why, precious metals dealers charge fabrication fee above a spot price, because of the value add going into converting that coin and bar. So to summarize,
but sorry, but for some people, and I think for some of the ones that you've made, they are quite intricate, but also some of them can be quite rare. So some people, just because there are people out there that don't know this, some people will buy a special gold coin or a silver coin from the Perth Mint because it's a limited edition supply, or maybe it's an ANZ coin. And those things, even though you're paying a fabrication fee, over time they can attract a premium because they're limited in supply. Would that be correct?
Yeah, absolutely, yes. So our minting department, produces some world-class minted coins with limited mintage. For example, a kangaroo coin or koala coin, we released a quokka coin last year with a limited mintage. Because it's limited, the secondary market for that coin is higher. So people are willing to pay a slight premium because there's restricted supply in terms of the mint of that coin.
Yeah.
So to summarize, Kerry, just this slide, PMGold, in my view, what makes PMGold stand out from physical gold? It's convenient. Customers can buy and sell PMGold anytime that they wish. It's cost effective because there's no fabrication fee and there's only a small management fee of 15 basis points. And it's convertible to physical gold anytime an investor wants to have physical gold delivered to the doorstep. Next up, I'll go through three reasons why, in my view, investors should look at buying gold today. The first reason is returns. Now, when I say returns, I don't mean dividends, because we know that gold does not pay any dividends. Gold is all about capital gains. And in fact, it's exactly 50 years this week that the gold standard was dropped.
That's right, it is too. It's this week.
Yep, exactly 50 years. And if we look back at the history of the return that gold has generated over the last 50 years, it comes to 9% per annum return since the turn of the century. So, when people look at gold, they say that gold is not paying a dividend, but we should also think about the capital gains that gold generates, and history shows that. Second reason being, there's been a number of paper and written content around this, where history has shown that gold tends to perform 20% better during times when interest rate is 2% or lower. Now, interest rate at the moment, if you look at the real interest rate, it's negative. Most of the developed countries, the core or the real interest rate is negative. Now, the question is that when do we ever see interest rates going back to above 2%? in my view. Even though the markets think that inflation is transitory, inflation will be brought down to 2% to 3% in the next few years or so. If you look at the inflation numbers in the US, it's still above 5%.
Yeah.
So when do we think, real interest rates are going to go back to 2%? I don't know. I'll let the audience decide. But the current environment, I think we are here to stay for a number of years in these low interest rate environments.
Yeah, tend to agree with you on that one.
And the last is gold acts as a balance to an investor's portfolio. In my view, gold is effectively an insurance. It's your insurance policy to your stock market portfolio. And we've seen, and Perth Mint have come up with a number of papers that shows that gold tends to perform very well when the share markets are volatile. And the last 9-10 months, yes, we know the stock markets have not been volatile. In fact, the share markets, the S&P 500, has doubled since March last year. The ASX has gone up 80% since March last year. Now, the question is that for how long is this stock market party going to carry on? And I'm seeing some of the investors, the institutional investors, taking advantage of this low price of gold that we have at the moment, trying to rebalance and strengthen the portfolio. So last week, we saw the price of gold drop by $100. And here at the Perth Mint, we had plenty of demand, plenty of investors using that opportunity to rebalance and strengthen the portfolio.
Interesting.
And that's all I had with the slides, Kerry.
Perfect, because you've got 2 minutes left, which means that I can ask you a couple of quick questions. You mentioned that the price fell last week, which it did, and that rattled a few people. But it's interesting because if we go back, you said the returns, the price of gold has delivered strong long-term returns. And I think that that's what people miss. I think people quite often look at that sort of short-term volatility of $100, and then they freak out. But it's increased by about 9% per annum since the turn of the century. So gold has been stronger for longer for a very long time. So I think that's what people misunderstand. Do you agree with that statement that people are looking at that sort of short-term volatility rather than the long-term insurance hedge?
Yeah, absolutely, Kerry. And my colleague Jordan Elisio is putting out a paper that clearly explains what's happened in the gold market in the short-term period, as well as over the last 50 years since the gold standard was abolished.
Okay.
Now, we need to look back. Yes, the price of gold has dropped 9% this year, and the price was, in fact, in June this year, price in US dollars was above $1,900 US dollars. And the price right now is around $1,750 US dollars. So yes, there are some investors who have bought high and going through a bit of pain that gold is not delivering. However, we need to look at the history. We need to look at, yes, over the 50 years, gold has gone up over 9%. But let's look back what happened to gold in September 2018. In September 2018, gold was below 1,200 US dollars an ounce. It went up 75% to more than $2,000 in August 2020.
Yeah.
Right? So since August 2020, yes, gold has gone down from $2,000 to $1,750. Now, like with every asset, it's not always going to go up every day, right, or every month. There has to be some form of momentum exhaustion, right? So that's what we're seeing here at the moment with gold, that yes, the gold price looked high. It had gone up 70% in 2 years. However, based on the 3 points that I have up there, the underlying fundamentals are still there for gold. The stock market party is still on. There's plenty of liquidity in the markets. For how long is that liquidity going to carry on? And we are still in a negative interest rate environment.
Yep.
If you look at central banks, I don't see any central banks looking to, taper or reduce monetary, the printing of money.
Absolutely. And on that note, I have to finish up. Sorry, Sawan. We are so tight for time. We have got such a packed agenda. I want to thank you so much for your time today. It's brilliant to have you here. And I hope one day we can all get across to the Perth Mint and have a look at that gold pour, I should say. And thank you so much for your time.
Thank you, Kerry. Pleasure.